It's time now for an in-depth look at the global markets this afternoon, and for that I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
Thank you for having me today.
Well, it seems like there's a little uncertainty about whether or not the Federal Reserve will be cutting interest rates this year aggressively, and that sent Wall Street a little lower on Tuesday. Korean stocks today also sharply lower. What's the story out there?
In Wall Street, stocks edged lower on Tuesday as quarterly results from banks added to concerns about lower interest rates dampening their profits, while comments from U.S. President Donald Trump on trade also dragged down Wall Street's major indexes. The S&P 500 closed 0.34% lower, while the Nasdaq fell 0.43%. Stocks moved lower after Trump said there was a long way to go with China on trade and threatened to put tariffs on another $325 billion worth of Chinese goods. The major indices briefly paralleled losses after Federal Reserve Chairman Jerome Powell reiterated that the central bank would act as appropriate to keep the U.S. economy humming, but they later moved back to their previous levels. Asian shares drifted off on Wednesday as anxious investors awaited more earnings reports from corporate America, while the dollar held firm in the wake of robust U.S. retail data and a Brexit-driven dive in the pound. Japan's Nikkei declined 0.31% and South Korea's KOSPI lost 0.91%, while Chinese blue chips dip into the red.
Well, tomorrow the Bank of Korea will be meeting to decide on interest rates. Some analysts think the BOK might cut rates sooner than later in view of the Japan export situation. What do you think?
The Bank of Korea is under growing pressure to lower its key interest rate after U.S. Federal Reserve Chairman Jerome Powell strongly hinted at a rate cut later this month. I expect the BOK is likely to lower the benchmark rate in August at the latest if the Fed cuts its policy rate this month. The Korean Central Bank is scheduled to have rate-setting monetary policy committee meetings in July 18th and August 30th. The central bank does not have a lot of options now if the Fed lowers its rate this month. Two of the BOK Monetary Policy Committee members have continuously mentioned the necessity of a rate cut. Korea's growth rate has also been underrated by a number of global rating agencies. However, the BOK seldom adjusts its policy rate before the Fed's impending monetary policy decision. The BOK is more likely to lower the policy rate after the uncertainty on the Fed's decision is removed.
Yeah, speaking of uncertainty, Korean businesses are worried about a possible second round of trade retaliation from Japan. What might that look like if it happens?
As the second round of economic retaliation by Japan becomes more realistic, the tension in domestic IT industry, electronics, battery, and automobile electric parts makers, which are mainly importing Japanese materials and parts, is also rising. First of all, concerns about the semiconductor industry, which has been hit harshly by the first round of trade retaliation, are greatest. Domestic semiconductor manufacturers are worried that Japan will expand the range of export control items to silicon wafers, which are essential for semiconductor production. Battery makers for electric automobiles, such as LG Chemical, SK Innovation, and Samsung SDI, along with producers of precision electronic components, such as LG Innotek and Samsung Electromechanics, could be the target of the second round retaliation. The reliance over Japanese parts supply of LG Innotek and Samsung Electromechanics, for example, are 15.8% and 13.8% respectively, which are more than twice as much as Samsung Electronics.
Well, we'll have to keep watching that story, Dr. Hwang. But that's where we'll have to leave it for today. Thanks so much for making time.
Thank you.